Have you ever looked at your morning coffee or your quick office lunch and thought about how easily $25 slips away each week, almost without noticing? For many of us, juggling work, family, and everything in between, $25 feels like a small, forgettable expense. Nothing worth worrying about. But what if I told you that inside that $25 lies a seed, a small seed that could grow into a financial tree, one that produces passive income month after month, quarter after quarter? A machine that keeps paying you, even while you're asleep, on vacation, or spending time with your kids. This isn't a get-rich-quick promise. This is a skill that Warren Buffett has mastered, a skill that has helped millions of everyday people achieve financial freedom. That skill is called dividend investing. And in today's video, I won't just tell you what it is. I'll walk you step by step through how to build your own passive income machine, starting with just $25 a week. No need to be a financial expert, no staring at complicated stock charts, and definitely no gambling with your money. Let's get started. So, what exactly is this skill called dividend investing? Forget the fancy financial jargon for a moment. Just picture this. When you buy a share of Coca-Cola, you're not just buying a stock ticker. You're actually owning a tiny brick in their massive empire. You become an owner, even if it's just a small one. And when that company does well, when it earns a profit, what do? They take a portion of that profit and share it with owners like you. That payout is called a dividend. It's like a thank you, a reward for trusting them and being part of their journey. Coca-Cola has done this every single year, without missing a beat, since 1963. Johnson & Johnson, a healthcare giant, has paid dividends for over 60 years straight. These aren't startups, these are financial fortresses that have weathered decades of economic storms. Now, when you receive that dividend, you have two choices. 1, cash it out and treat yourself to a nice meal. Or 2, and here's the real magic, you use that money to buy more bricks in the same company. The more bricks you own, the bigger your next dividend. And just like that, your wealth keeps growing, like a snowball rolling downhill, gaining size and speed with every turn. That's the essence of building this machine. You invest in great businesses and let their success build your wealth. Why is this the perfect strategy for people like us, busy, short on time, and not willing to gamble with our hard-earned money? First, it transforms you from a worker into an owner. Your money starts working for you 24/7. That's the purest definition of passive income. Second, it removes emotion and luck from the equation. We're not trying to buy low and sell high. We're building wealth in a systematic, intentional way. Our only job is to keep adding fuel to the machine. And, most importantly, with just $25 a week, you're not just buying stocks, you're buying the most valuable asset of all, time. Someone who starts investing $100 a month at age 30 will likely end up with far more wealth than someone who waits until 40 to invest $200 a month. That's the incredible power of compound interest. Now, let's get to the most important part, the blueprint, the step-by-step plan to build this machine from scratch. Step 1. Choose your workshop, aka your investment platform. To build a powerful machine, you need a solid workshop. Today, there are plenty of trustworthy, beginner-friendly platforms in the United States and Europe. Fidelity, Charles Schwab, and M1 Finance are some of the top names, like professional-grade workshops equipped with everything you need. But there are two essential tools your platform must have. First is fractional shares. This feature allows you to buy a slice of a stock with as little as $5 or $10, instead of needing hundreds to buy a full share. It helps your $25 go as far as possible. Every dollar is put to work. Second, DRIP Dividend Reinvestment Plan. This is the automation switch for your machine. Make sure the platform you choose offers this. It's what turns your investment into a self-growing engine. Step 2. Install the automatic fuel supply line. A machine can't run without fuel, so open your banking app right now and set up an automatic transfer, $25 every week from your checking account to your investment account. This is the single most important step to eliminate procrastination. Don't think of it as an expense. Think of it as paying your future self first. Make it unconscious, like paying your utility bills. $100 a month. On autopilot, with discipline. That's how the habit is built. That's how the machine starts to run. Step 3. Assemble the core components, aka build your portfolio. For beginners, simplicity and sustainability are key. We're not chasing hot stocks or trying to 10x our account overnight. We're building a fortress, and this is a simple, solid blueprint you can start applying today. 50% of your fuel goes into SCHD, Schwab, United States Dividend Equity ETF. Think of SCHD as the frame and engine of your machine. It's an ETF, which means with just one purchase, you're instantly owning small pieces of over 100 top United States companies with a strong history of paying reliable dividends and maintaining solid financials. It's professionally managed, risk is diversified, and it offers an attractive dividend yield around 3.5%. This is the rock-solid foundation for your portfolio. The next 25% goes into Johnson & Johnson, J&J. This is one of the unshakable pillars of your machine. J&J is a global giant in healthcare and consumer products. Recession or not, people still need medicine, hygiene, and healthcare. That's why J&J has increased its dividend for over 60 consecutive years. Its consistency is the shield protecting your financial base. The final 25%? Put it into Coca-Cola. KO? If J&J is your shield, KO is the moat around your fortress. Coca-Cola's brand is a nearly unbeatable economic weapon. Warren Buffett didn't fall in love with it just because of the taste. He saw its enduring cash-generating power over decades. KO is that simple, reliable component that just quietly gets the job done, year after year. Step 4. Flip the automation switch. Activate drip. Now that your machine is fully assembled, the final step is to flip the switch. Go into the settings of each investment and look for the option called Reinvest Dividends or DRIP. Turn it on. When you do this, something magical starts to happen. Let's say you receive $5 in dividends. Instead of that $5 going into your bank account, the system automatically uses it to buy a small slice of SCHD, J&J, or KO. Next time, you'll earn dividends on a slightly larger number of shares. And just like that, your machine doesn't just generate money, it uses that money to upgrade itself, becoming stronger over time. This is compound interest, working quietly for you in the real world. Step 5. Perform regular maintenance, don't obsess daily. A good mechanic doesn't stand around staring at the engine all day. He knows it's working, and so should you. Let go of the habit of checking your account every day. Markets go up and down, that's normal, but it doesn't change our long-term plan. Instead, set a schedule. Once a month or once a quarter, open your account. Not to check stock prices, but to see how much dividend income your machine has produced and how many new shares you've accumulated. Focus on the growth of your cash flow, not the daily noise of market prices. The benefits of practicing this skill with discipline. First, it's peace of mind. That quiet confidence of knowing that no matter what happens at work, you've built another stream of income that's quietly growing in the background. It's like building a lifeboat before the storm hits. Second, and perhaps more importantly, you're buying back your future time. Every dollar of dividend income you receive is one less moment you have to trade for labor. The ultimate goal isn't to have $1 million, it's to have the freedom to choose, the freedom to do the work you love, the freedom to spend an afternoon playing with your kids without worrying about deadlines, the freedom to pursue a passion without asking for permission. And finally, you're building a legacy, a financial machine that doesn't just serve you, but one that can continue running, providing for the people you love long after you're no longer here. It's a gift of foresight. Financial stability doesn't come from a lucky trade or a winning lottery ticket. It comes from small, seemingly boring actions, repeated with extraordinary consistency. $25 a week won't change your life tomorrow, but 3 years, 5 years, 10 years from now, when you look back, you'll realize you've built an entire fortress, brick by tiny brick. You don't need to be rich to start investing. But you do need to start investing if you ever want to become rich and free. The machine is waiting to be built. The blueprint is right in front of you. Start assembling it today. If you found this video helpful, don't forget to leave a like and subscribe so you won't miss what's coming next.